The million-dollar question.
Yeah.
I don't know how much this is linked to, world growth and therefore China, or how much it's linked to dollar, which is also growth, but a different kind of growth, U.S. growth.
A little bit of both. There are reasons to be cheerful, and not just for today.
Always.
But going forward, I mean, it's absolutely clear that the industry as a whole has not been spending nearly enough on new mines, new processing, new everything. So at some point there will be a supply crunch. Now, in some areas you've seen it earlier than others, so cobalt and iron ore and so on and so forth. Eventually that will develop. And there are a lot of warning signs out there, particularly in the oil market. It doesn't look like it today, but if we go forward 5 years, no one's really built a major oil play for a while. I mean, the shale is lots of little different pieces. There's no mega projects out there.
Okay, talk to me a little bit about gold. And I do want to get back to mega projects, but actually, gold is not doing what it's supposed to do in these kind of markets.
No. Well, it depends what currency you're holding.
Fair.
If you're holding some of the emerging market currencies that had a little bit of a meltdown, then it's probably done quite well for you. As an inflation hedge, maybe not so much. I mean, it's absolutely fair to say that if you look in the speculative category of the US trading, it is incredibly bearish right now on gold. And I think, again, we had this conversation earlier, maybe there are better options out there. Gold does not pay any interest for the most part, unless you're a big central bank. And then you put that up versus cash or versus treasuries, whatever else, maybe it looks less attractive from that point of view.
Stuart, let me bring up a gold chart here that Francine mentions. This is one of the most famous charts we've got. This is inflation-adjusted gold set in 2018 dollars. So it's a bit distorted, but it brings back the huge boom of gold through the 70s up to the Paul Volcker 80s, and then it brings up the China boom that we saw in commodities through the 2000s and the collapse. Stuart, this is not an attractive chart. What are the ramifications to all of commodities if gold breaks down under $1,100 per ounce?
I mean, I think the ramifications outside of the precious metals markets are not that great. Arguably, even within the precious metals market, you've got palladium, platinum, rhodium, silver. These all have heavy industrial uses. So you've got that driver behind those, and they do tend to behave a little differently. So gold sort of stands alone as just a very bizarre commodity that does have some practical uses, but in terms of what's driving that demand, it's all about investment.